So I think they're live right now. What's up, guys? Edney here to another live stream. Hope I hope one more time you guys are well. Right, and today, as you guys can see, I'm here. Say that I'm holding science 17 February. Right, this month I took this trade on end of Asia session. Both of them. One I took at 5:57 a.m. and the other one at 6:51 a.m. too on the same day, the 17th of February 2023, of course. And those two trades was trades running. I took both of them with 20 contracts, but now both of them are I took partial, right? And I'm just rolling 10 contracts of each one of them. So yeah, let me just try to adjust here and my phone to see if everything is good. Quality of live stream is acceptable at least. There's an everything look everything look the way I want, right? So something very interesting too is that I prepare I have here one PowerPoint presentation for you guys about lead trading. And I think I will share some thought about this trade right here, and let's say in 5-10 minutes about if when we talk about everything. I'm one eye on the shop too. So if you guys have any question, you guys can feel free just to type in sit here. Let me actually test in the comment section um things. So one of my eyes is on the right, the chat too, and you guys can feel 100% share what you guys want. Right, so it's the trade running on. Wait, is like this, like this, 100% this way. You guys can see I have some statics to running here. I don't know if it's interesting for you guys to see. So statics here. I try to show you guys. Need to make my image very tiny, and I don't want to do that. I don't want to put my image here too, because I will ended up, you know, it, it above um the money, the money count, right? So maybe in this side, that is the best one, right? Because I put above this one, but a lot of people probably will come to this live stream and say I'm trading demo, and I want to show to them directly that I'm not trading demo. I know a lot of people have come with the question. Me too, I don't care. I will leave it this way. So, two trades right here. Something very interesting is before I took these two trades, I actually took three stop loss. Yeah, I ended up taking stop loss, three stop loss, $2,000 each one of them. So three multiply it by two. You guys know exactly how much money I owe. Those three stop loss cost to me. Right now, I'm on my equity is 220,000. But as soon as possible, as soon as I close those two trades, I think I will close some part of them during this live stream. As soon as I close them, I will 100% take make a withdrawal because it's already time, and put my account back to 200,000. That's my plan. put it again to 200,000 and take some profit, do some investments. I think it's important to. Well, please guys drop your like on this live stream. That's very important to me. And if possible, share it with one of your training friends. That's the most important one. If you want, don't even do the uh, you know press the like button, but 100% share it on Reddit, on Twitter, on WhatsApp, whatever you guys want it. So yeah, before take trade, I actually took stop loss $2,000, 2,000 is something, it's not 2,000 correctly, like exactly 2,000, 2,000 something, but doesn't matter to count. So $6,000 in total of loss, those two trades. I trying to search here on my trader to see if I can show to you guys. Yeah, unfortunately not. The only thing I have here on my trader right now is the partial that I took today on. As I told you guys, those two trades was with 20 lots, each one of them. So totalizing 40 lots. But I closed 10 lots on each one of them too and left 10 running. So as you guys can see here, this partial here I took today. This partial here today. So you guys can see 10 contracts, 1,000, and something. Let me make this bigger so you guys can see it way more better. Um, yeah, 6,310. Exactly what you guys have seen. That's the partial I took to. Let me take a screenshot. Yeah, so I will share it on my Instagram. Link of my Instagram is in the description. But any underline, the name of the channel, just search for the name of the channel. You guys will 100% see it there. So this trade was very interesting because as soon as we took this low right here, I was already expecting the price to go on a bullish trend, especially because we took, of course, the external range liquidity here, and we have a lot of buy side liquidity sitting on those high right here. So that was exactly what I was looking for, and I was thinking, okay, probably we have a let me do this thing better. Actually, best way I can, and the best way I can do it actually is to draw. So here we had this external range liquidity at this range low, right? um this text, right? It's text, yeah. So here we have external range liquidity, not range liquidity. So when price touches the external range liquidity here, I was already expecting the price to go on a bullish trend, right? Here we had another break of structure. Of course, the way I did structure one more time, it's very different than most part of traders do. But for me, here we have another break of structure and another one a little bit lower too. Exactly, here we have another break of structure too. My way of read structure, of course, always important to see that again and again. And here we have break of structure. So after this break of structure here, I already knew that price would make a huge retracement. And you may are asking yourself why. First, because when price made this first break of structure here, and I get sorry, this first break of structure here, when price made it, let me change the color and maybe lime green and make it a little bit more bold. So when price made this first break of structure here, I already knew that something will happen. So my first thought was that we will make this retracement till this point here to mitigate this zone of interest, the area of interest, point of interest, supply level, or whatever you guys want to call it. I know different people can call different names. I have the rectangle here. I don't know if I have rectangle. I think they are on insert, right? Insert shapes, maybe shapes, rectangle. So here right? A lot of people, you guys can see clearly it's a supply zone, right? But price when price broke the structure here, it didn't make, you know, the retracement it need to do to actually go and grab the liquidity that is sitting on this high and mitigate the level, right? So let me delete this one and this one right here now. I already knew that all movement price is doing here, going down, up, low, high, and low, going high, and low, was liquidity creation to at some point come back and mitigate this level right here. So all these move here to the downside for me, I already knew that it was liquidity creation because the first impulse movement price did and came back to mitigate it, right? So that was the first thing. After price break structure here that I showed you guys, let me delete this. Wait, delete this one. Drink some water. So this first break of structure here, right? Break of structure. When this happened, I already knew that okay, now we have buyers coming to the market very strong, and they was able to make a shift on market structure. So clearly here again was on insert shapes, right? Yeah, here at some level, price was able to go even higher, was able to respect this demand level. Let's say I was actually expecting the price to retreat way more than that to at least, some level here, know, exactly on the extreme area of this level here, but it didn't. So unfortunately, it actually respected this level right here. And then, as you guys can see here, we have this huge movement, right? So when price respected this level, I was able to capitalize exactly right here. I have some arrows here. I was able to capitalize exactly right here using a continuation entry model, right? So I used a continuation entry model to capitalize exactly right here. All of this is explained, the continuation entry models that I use to trade is explained on my trading course. If you guys have interest, the link, of course, in the description of this live stream. But I used it to catch this first entry exactly here, right? The second one, I catch it using the same thing. Of course, both of those trades was catched on 1 minute time frame, just to be clear, right? Wait, I think something glasses. So both of these entries, I used 1 minute time frame to take them, and of course, as you guys can see, they worked very, very well. And right now, those two trades are running. And as I told you guys in the beginning, too, as soon as we made this huge impulse, if price didn't retrace to catch the liquidity here, I already knew as at some point we will retrace it. When we made this break of structure, I actually, I prefer to call it shift of market structure. When we made this first shift of market structure, because the structure was going down, right? So this can't be a break of structure. This is actually shift. So the market shift the structure it was doing till this moment. And both of them I took on 1 minute time frame. And I was expecting exactly here this high to be taken out again. Of course, when price reached this zone right here, this supply zone, of course, the main important thing here actually isn't even all these supply zone. It's actually just this little imbalance here. We have this little imbalance here. That's the most important thing. Every other thing, you can just think about it as point here. You can wait for confirmation. But the main important thing here is it's clearly this imbalance on 50-minute time frame. And of course, we have a liquidity and inducement theorem zone 2 exactly here. Let me mark it. Exactly here we have a liquidity and inducement theorem zone. Is between these two, how can I call that? Wicks, right? And as I told you guys too, at this high, I was waiting. I knew, just to be clear, let me change to bold right now and change the color to black. I was waiting for what price to catch the, like I said, liquidity that is sitting above those highs right there. Uh, right side liquidity. Yes. So yeah, exactly here. I was already expecting the price to sweep this. But as soon as price filled this fair value gap, that was exactly where I took my first partial. Because I knew that if price start to, retrace very, very high at this level, I don't want to continue in this trade. So what I did, I took some partial, right? Um, yeah, let me see. And that, yeah, till now, not still fine. So after explaining this entry, of course, in a very simple way, I didn't complicate it too much. I didn't go to 1 minute time frame, but I think I will record a video just explaining this to you guys. I think, as I told you guys in the beginning of the live stream, I did, so I prepared a very beautiful PowerPoint presentation for you guys about liquidity and inducement too. It's here with me. It's 14 pages explaining liquidity and inducement theorem, concept of it, right? And I think that's the main thing I want to do in this live stream. Explain to you guys and show to you guys the concept of liquidity and inducement theorem, and I hope you guys can understand it and learn with it. So let's change here. You guys, the MetaTrader will disappear, right? So don't fear. MetaTrader will disappear, and I will put a the PowerPoint presentation for you guys, right? It will take some minutes, but basically it will be something like this. So you guys can't see the MetaTrader anymore, but I'm still here. And let me try start the presentation here. If you guys will be able to wait. I click change here. It's F5 to start the presentation, right? Wait. Uh, change something. I don't know what. Be fair. Something here and I don't know what. Okay, I think I got it. Just to add a new source of capture window cap PowerPoint. Exactly. Here we go. And I'm back. Well, everything is back again, right? Back again. Uh, So I will actually uh, chat. I don't want to have questions while I'm explaining. When I finish it, I'll chat again. Any question you guys can see me at the end of the presentation. But while I'm explaining, I don't get any. I want just to explain everything. Oh, but I can setting. Look what I did. To see better, I took off my glasses. Wait, I need to turn off the chat, but okay, I think now, maybe, no. Okay, anyways, let's start, right? Let's start. Let me check the sound again if everything is well. If everything well, if you guys can see me and hear me, yeah, 100% you guys can. So let's start now. Talk about liquidity inducement theorem, and let me show and present to you guys this beautiful piece um, of beautiful piece of presentation. All my love for you guys. Just a here we go. Here we go. So liquidity and inducement theorem. Just for you guys to know, I use it, of course, a lot, right? As you guys probably, if you guys already saw any content about liquidity inducement theorem on live streams or on any other video on YouTube, you guys probably noticed that every people that talk about liquidity and inducement theorem, they do a lot of comparison. I don't know how to say in English, sorry, but they compare it a lot with a matrix, right? So liquidity and inducement theorem is what we'll be talking about for the next, let's say, 1 hour during this in this live stream. For you guys that don't know, liquidity inducement theorem is a trading strategy. It's a trading strategy, of course, focused as any other one to make you profitable, high risk reward, right? And know exactly the market if the big players are inducing you to take you on position for them to, of course, capitalize in your money. So let's go to the next page. Uh, yeah, as you guys can see here, this slide is the second one, right? Liquidity and inducement theorem, lead. Lead trading is a trading strategy that aims to take advantage of price inefficiencies in the foreign exchange market. This strategy is based on the idea that changes in the market liquidity can induce price movement and that traders can profit from these movements by trading in the direction of the change, right? So what's liquidity and inducement theorem? liquidity inducement theorem, LIT, is a trading strategy that aims to take advantage of price inefficiencies in the foreign exchange market, the forex market, right? The strategy is based on the idea. So the base of the strategy, right? Base idea of the strategy is that price in the market, so changes in the market liquidity, sorry, can induce price movement, right? And that traders can profit from these movements. So I think you guys can't see what I'm saying right now for some reason. For some reason, we have a bug on Adobe and it didn't show it. The slide I'm showing, I'm looking at it right now. For some reason, I don't know why. What's happening? So currently, okay, okay. Hmm. So I think I will just simplify all the thing and share instead of share a portion of the thing, share the entirely screen so you guys can see whatever I'm looking at it the moment, right? So I think for that I need to actually delete this one, and you guys won't see anything now. Everything is black again, and add a new source, and this is a display capture. Now I think you guys will be able, right? Exactly. Now you guys are able to, yeah, 100% you guys are able now. So now I can actually go back to this and let me see if I change to the first slide, if you guys can see it again. I have some delay here, 100% because I need to update. But you guys can see it. You check. Yeah, almost everything. Yeah, 100% you guys can see now if I change the slide too. So again, let's continue. Let's restart actually. Liquidity and inducement theorem is a trading strategy that aims to take advantage of price inefficiencies in the foreign exchange market. The strategy is based on the idea that changes in the forex market liquidity can induce price movements and that traders can profit from these movements by trading in the direction of the change, right? So that's something important. It's actually obviously if you know that the price will change the movement, you want to trade on the where the price will go after this movement happens, right, of this changing. So we already had a lot of problem trying to fix this to show to you guys what actually was happening, right? So on the third slide I can show to you guys how it works, right? We can abort start to talk about the concepts of how the strategy actually work, right? So how it is, how is what it is, sorry, what's the idea it's based on, and how it works. So the basic idea behind it, I told you guys on the previous um, slide, lead strategy is based, you know, the basic idea behind the lead strategy is that price movement are driven by changes in the liquidity which can be induced by major institutions trades. So here we go a little bit more deep, right? The first slide I told you guys that this change, when it happens, you need to follow. But what caused these changes on the market liquidity? Major institution trades. So now you go, why these movements occur on the market. These movements occur in the liquidity, right? Because of major institution trades are trying to induce you into something, right? And again, let me read it again, which can be induced by major institution trades. Changes, long or short, of course, also known as big players. And we as retail traders, we have these on the market, right? We call everyone that is one institution, they are one institutional trader. You can use institutional trading strategy, but you are not in one institutional, right? Because to be institutional trader, you need to be one institution, and you are not in some level, right? Because if you manage your own edge fund, and to manage your own edge, to open one edge fund isn't something on other world. 100% it's not. You can just open it in some um, country, fiscal paradise. I don't know how do you guys call it in English, but countries that have more favorable laws for you, and you guys can open in Hong Kong, in some South Africa countries, some islands on uh, Europe too have this benefit for people. They have more better laws for you that want to invest in this kind of thing, and better tax fee too, right? So the strategy involves identifying high liquidity periods and using these to enter trades in the direction of the price action movement, which can, sorry, some reason I I just moved it without it. That wasn't my intention. Using these to enter trades in the direction of the price movement with the goal of capturing quick profits, right? So of course the goal of every single trader is to make money. So that's why I put it here that the goal is of course to capturing quick profit. It doesn't need to be quick, of course. You can take your time to make it the amount of money you want. And holding the trade I showed you guys in the beginning of this live since they what? I already forgot. I'm holding this trade since when? Let me check again. Since 17. And actually things are not going as good as I thought it was. You guys can see here they are not so price increased. We were making over 20,000 and now it increased a lot, and now 15,000. I think actually I should take some partial. What do you guys think? Huh? Let me close this trade. This one that is giving to me right now. Let me make it way more. I think I will close this trade right here. Okay. Yeah. Partial taken. I closed one and I left one running. Right. You guys can see now price start to retrace it very aggressively. And some time ago it actually almost took me out of the trade at break even. So now I took some partial and secured 50,000 in profit. Of course, as I told you guys, both trades was with 20 lots and now they are just with 10. So I already took partial before this one. So yeah. Let's just continue, right? I think this is more important than just show you guys that I took some partial. So Yeah. The third point here is the effectiveness of liquidity and inducement theorem, right? So the effectiveness of the lead strategy can depend on various factors, including market condition, central bank policy. This is very important to talk about, right? Central bank policies. You guys know right now the current economic zone, gray zone we are in. High inflation, high, uh, you know, rates, Fed rate, right? And all these major economic things can influence on big players trades. They can take less risk or more risk, and this can always, of course, it will influence to the way each trading strategy will work, because lead trading strategy is directly connected of in how big players, as I told you guys on the first point here, on how they change the liquidity on the market, right? So the first point, the basic idea behind the lead trading strategy is that price movements are driven by changes in liquidity, which can be induced by major institution trades changes, long short, also known as big players. So the effectiveness of lead trading strategy can depend on various factors, including market condition, central bank policy, and the trader's ability to identify and capitalize on changes in the liquidity. The third point here, and to the point, trading ability to identify and capitalize on changes in liquidity, it's very personal. I can be a I can be very, a pro guy identifying and capitalizing on these opportunities when I saw them. And you have another guy that's, he's a medium guy, he saw some, he don't see some, and a dumb guy that can see anything, of course. So it really depends from traders to traders, right? So here, designed to make you fail, right? Here we have to the first comparison with the movie. So institutional players such as banks, hedge funds can have significant influence in the forex market due to their large trading volumes and access to sophisticated trading tools, such as high frequency trading tools. Today I have one high frequency trading bot, but it's way far from the technology these guys have, right? They are way far than me, but I don't need near technology, right, to be successful. Of course not. My trading bot have some fails. Of course, he takes stop loss, but at the end of the day, he's a very good trading bot and still profitable. I already recorded a video here on my YouTube channel talking about this trading bot. If you search on my YouTube channel, you will 100% found it. At the moment, we was managing, I think, 100,000, over 100,000 clients funds, but this service is closed right now and it won't open soon. So don't even ask me about it, right? So this can sometimes lead to market manipulation, where these players intentionally create false price movement to trick other market participants, retail trader like me, like you, into making trading decisions, right? So what's this? This can sometimes lead to market manipulation, inducement, where these players intentionally create false price movement to trick other market participants into making incorrect decisions, incorrect trading decisions. Inducement, right? So liquidity, we already talked about liquidity on the first three slides. Now we start to talk about what? Inducement, right? And let me show to you guys too how dirty is this game is designed, how dirty they go to make you fail, right? Let's go to the next slide. So here, dirty game, right? One such method is stop loss hunting. I think everybody already heard about. Okay, stop loss hunt, stop loss hunt, stop loss hunt. What is stop loss hunt, right? Where institutional players create a false sense of market movement in one direction. Bro, if you are a trader, if you follow the chart when we have major economic news, you 100% saw this happen. I have one model actually that I all the time take trades using stop hunt. All the time I take it. When we have CPI, when we have payroll, when we have, every major um, economic release, economic news. So, but of course, I don't use the like on every currency, just USD. That's my preference too, because I when the major economic news is on Euro USD on dollar, United States dollar, I can trade Euro USD, I can trade Nasdaq, I can trade S&P 500, I can trade US 30, I can trade gold. Because these major news will have high impact, very, very high impact, huge impact on these pairs, right? But like USD CAD, USD CHF, I don't trade these pairs, right? So if I open my trading view for you guys, let me show it to you guys actually, right? Don't take any time. Don't take time. Let me open my trading view here, and you guys will see that I don't trade too many pairs. I have like five, six pairs max. Not too much thing. Look, I have oil too. So I need to go back here and see what exactly what you're seeing. Maybe increase here to, yeah, look what I have here. I have Euro USD, I have gold, XAU USD, right? Gold USD, US Tech, Nasdaq, US 100, wherever you want to call it. It have different name or different group, right? So I have US oil, spot, right? You can trade future too, no problem. You can trade Nasdaq future, US 30 future, gold future. I don't know if actually we have gold future, but oil future we have 100%. And US 32. That's the pair I trade. Right? That's the list of pairs that I think, okay, I'm comfortable with. I don't need more than that. That's okay for me. Right? Let me turn this back to this place. And yeah. So one method is stop hunting, where institutional players create a false sense of market movement in one direction to trigger stop loss orders placed by retail traders. But to be fair, it's not just retail traders, right? Some institution too trap other institution, but for them it's like, okay, I'm losing money right now. I will leave this guy doing what he want to do, and then I will go to the market and buy because they have billions to do it and move the market in the direction they want to move it, right? As I told you guys, we talked about inducement now, liquidity. They have like infinite money, the FU money, right? Institutional players can create a false market movement by temporarily pushing price in one direction, right? So they can do that easily. If you have like, um, if you open right now, add the volume indicator on your trading view right now, and see the volume like normally a 50-minute time frame candle need to move. Like take a huge move on 50-minute time frame and see how much money, how much volume was inside this candle. And you can see the amount of money you actually need to actually make a relevant movement on the market, right? So institutional player can create a false market movement by temporarily pushing price in one direction. My eyes are now almost burned. Let me put my glasses again. Thereby triggering many stop loss orders. They can quickly reverse the price movement, leaving retail traders with a large losses while they profit from other traders, right? And the market is this, right? That's I put it like dirt game, but that's the market. If you are making money, someone else is losing it. Because if you buy, someone else sell to you, or someone is selling. If you sold, sorry, someone else bought for you. Simple like that. The market, it's a machine to transfer money. It don't generate new money. Let's say in this way, just transfer. You're like, okay, this guy want to buy, okay, sell to him. This guy want to sell, okay, this guy here, you buy from him. Simple like this. So traps to manipulate. So here I make a list with five five most common ways institutional players, big players, institutional traders manipulate the market, right? And that's not just for the forex market; it's too for stock market too. Actually, every single market, crypto market, doesn't matter the market to be. So spoofing. This is when an institutional player places a large number of false trades in the market with the intention of creating false impression of demand or supply for a particular currency, stock, instrument, doesn't matter. They can cancel this order before they are executed, leaving the market participants with incorrect market information. All these traps right here, they are illegal. But guess what? The government is inefficient in everything they do. So investigate these things. They are bad as everything else they do. So spoofing is more common to be fair on markets where you can track buyers and sellers, like the the the, the, the stock market or even the cryptocurrency market. Why? Simple, because you can be on your trading desk, right, on your trading app, and track everyone that is buying and selling and see where we have more buyers, where we have more sellers, and see everything. So if one institutional player, let's say, places a million share to sell at $17 of some random stocks, everyone will think, okay, at 17 you want to sell. So let's buy till 17, right? Let's buy till 17. Or, but in the truth is that the institutional player, of course, all these things is doing with bots, right? They are very quickly. You can, it's impossible. It's human. It's impossible for a human to, to execute so many trades and cancel them so fast. It's just impossible. So you start to buy expecting that at 17 price will have a big hit, so you want to sell everything at 17. But actually the institutional player is buying at, let's say, 14, because everybody is pushing the price up. So when price hits 17, he actually won't sell everything. He will cancel every order before they got filled. That's spoofing. So front running, the other trap, this is when an institutional player uses their advanced knowledge of large order replaced by a client to place their own trades ahead of the order, thereby profiting from the price movement caused by a client's order. So that's basically insider trading. Let's say you call your broker and say, okay, I want to buy a million share of Tesla. They say, oh, you want to buy a million share of Tesla, so they will go and buy 100,000 for them. And when you buy $1 million, a million share of Tesla for you, the price will make a huge movement and they will sell their 100,000 shares on this move to the upside, right? Wash trading. This is when an institutional player simultaneously, that's bad, right? My tongue just break on it. Simultaneously, right there, buys and sells the same currency, creating the illusion of increased market activity and manipulating the price of the currency. Filling in. This is when an institutional player intentionally drives the price up. Of a currency by simultaneously buying large amounts of it, creating the illusion of strong demand and attracting other traders to follow suit. Snipping. This is when an institutional player places large trades at the bid or ask price with the intention of manipulating the price of a currency in their favor. So liquidity and inducement, that's what we'll be talking about in the next slide. So illiquidity and inducement theorem lead strategy can help traders identify profit from market manipulation by large institutional players, despite the disruptive nature of the market manipulation, it often leaves distinct footprints. It often leaves distinct footprints. Always institutional players made change on liquidity, they will leave footprints on the price action. Always. And that's exactly where liquidity and inducement theorems come in and help you identify them and profit from them. So uh, it often leaves distinctive footprints on the chart and market data. By recognizing these footprints, trader can use the lead trading strategy to make informed decisions about when to enter and exit trades. And here, of course, at the right on the right side, you guys can see a oh, another take of the movie. If you take the red pill, you stay. No, this is the second phrase, right? If you take the blue pill, the story ends. You wake up on your bed and you believe whatever you want to believe. If you take the red pill, you stay on Wonderland, and I show you how deep the habit hole goes. Right? So that's exactly what I'm trying to show to you guys right now. Always we have big movement, big changes on market liquidity. You will have to institutional players leaving footprints on the chart, on the price action, all the ways, all the way. That happens all the way. And that's exactly what I use. Then I identify them and I take my trading decisions. If I was able today, if I was able today to take the trades I took and I show it to you guys, and I was able to close over 15,659 and 20 cents in profit today, it is because I mastered the expertise, the necessary expertise to identify these footprints institutional players leaves on the charts. If I have right now a trade running in $8,000 in profit, it's exactly the same reason. I'm able to identify these footprints, and that's the only thing that can make you become profitable. Let me change this again. Drink some water and let's continue. So this, wait, go back again to PowerPoint. So I will answer all the questions you guys have to sell to me at the end of the live stream, right? I'm seeing Jagabald. So, oh, okay, he's my mentorship student. Okay, I can see that. At the end of this live stream, I will answer all the questions you guys have to send to me. But right now, I will just focus on myself on the explanation of the concept, right? So I was trying actually to turn off the chat, but I don't know where I need to go to do that. So that's why it's still available for you guys. Unfortunately, I don't know where I should go to of um chat. Trying to search again for it, but I just can't see. Well, I have told you guys at the end of this live stream, I will answer all the questions. Right? Just wait for the end of this live stream, and I will answer everything you guys, every question you guys have to send to me. Right? Just wait to the end. We are at the middle of this PowerPoint presentation I prepared for you guys. We are at the middle of it. Exactly right now, we are at the middle of it. And now I will show to you guys some examples of trades that I took using liquidity induced mentoring. Some of them I made a trade breakdown explaining, showing for you guys, showing everything for you guys. But I don't post every trade I do. 100% I don't. I don't have you know the strength, let's say this way, to explain everything, and everything go trade and posting. Sometimes I'm just sitting here on my office. I want to take a trade and relax and see it running, see my stop loss, see my take profit. And sometimes I open a live stream and just leave the MetaTrader running and showing to you guys what you guys want to see, whatever you guys want to see. So yeah, let me show to you guys the first example here we have. So this is trade right here. I took on Euro USD. As you guys can see, it's 4-hour time frame. Again, I have some messages here on my chat, and I am telling you guys again and again and again. I will just answer questions at the end of live stream, and you guys keep sending to me questions on the chat, and that took me out my attention from what I need to explain to what you guys are sending on the chat, and that's bad because I can, focus on two things at the same time. I can't, I don't have this power, unfortunately. I would like to have it, but I don't. So please, guys, don't send anything at the chat right now. Leave it. At the end of this live stream, I will answer all the questions you guys sent to me, right? So 1 to 48 risky reward trade on Euro USD. You guys can see this trade right here, exactly how I took it. So almost this trade was almost a break even, right? Wait, let's go back again. Okay, almost a break even here. Price almost took me out of break even exactly here. And then we have this huge move to the upside. This move to the upside was sponsored by, I don't remember right now if it was CPI or payroll. I don't remember right now, but one of them. We have this huge move, and I was just with my order there. 4-hour time frame, beautiful trade, 148 risk reward. One question you guys may have right now is, okay, 1 to 48 risk reward. That mean that doesn't mean that I actually hold this trade. Let's say if I took this trade with $1,000, I made $40,000 this trade. No, that doesn't mean that. Because on the all the way up, I was taking some partial. Sometimes I took 1, 2 partial, not more than two actually, during the trade. So let's say at the end, it probably was like 1 to 20 risky reward at max, because I 100% took some partial during this move to the upside, right? So here you guys have one gift for you guys. This right here is a refinement, a little refinement that I normally, this type of content, I don't show it on any of my free videos. I never show it on my YouTube. Now, right now we have 8 person, 7 person actually on the live stream, and this is the kind of content I don't share. I don't share. I never share them um on a video on YouTube. So this is one example of a lead trading refinement. Of course, this refinement right here is on 50-minute time frame, and from 50-minute time frame you can refine it to 1 minute, even to seconds. And of course, I won't talk about that on the live stream. I think this is a premium content. Some persons, some students is learning them, and I think it's unfair to them to give you guys this for free, right? But anyways, let me show to you guys something that I can actually share to you guys. So here, follow the right rabbit, right? This is the what they said to Neo. And don't worry, guys. It already here, still running here, 6,000. What a trade, beautiful trade. Now, yeah, still running. So, lead trades here. This is one example. This is I shouldn't put this for you guys. Well, that's bad, bro. I shouldn't share this with you guys. I shouldn't. This is a clear refinement of liquidity and inducement theorems on 1 minute time frame. This is the I shouldn't share with you. I won't talk about this. You guys can see it, of course. Explanation is here. The practical example on the chart is here. I won't explain that because I think that's not fair to my student to explain that for you guys, right? You guys can see it. It's on my this screen right now, but I won't talk about it. Let's just go to the next slide. And I can see here that the next slide shouldn't be on this live stream here. I should delete it before, but you guys are here. Okay, I will share it with you guys. So this is the next slide. Another example of a clear refinement on 1 minute time frame of a liquidity and inducement theorem zone. This probably was the 1 to 20, 1 to 30 risk reward trade too. I won't talk about it. I won't explain anything about it. You guys can just see it. It's on the screen, Yeah, that's it. Let's go to our last. Well, this animation was very beautiful. Let me put it again. I really like it. That's very pixelized, right? So, that's very beautiful animation. By great work I did. So, free yourself. This is for the. I recorded this to my um, mentorship students. That's why some exactly here I say the next class in our course on liquidity and inducement theorem lead because this is just the concept and I show it to them all the practical part of it, right? On the chart, refining zones, showing to them how to take, how to identify these zones, everything. I show it to them this, but this was the conclusion, right? So far you have learned the theoretical foundation of the lead strategy, and how it can help traders make informed decisions in the forex market. In this next set of classes, we will dive deeper into the practical application of the lead strategy by analyzing, identifying, and identifying regions of liquidity and induction in the market. We will use real-life examples and market data to demonstrate how the lead strategy can be applied to identify high liquidity regions and how these regions can be leveraged to make profitable trades. Uh, Again, I just showed this practical part to my students, right? That's just the conclusion of the first lesson that was about just the concepts, and that's what I think. Okay, I will release the concepts to my YouTube channel too because I think they will like it. It's dope, They can 100% learn something, and I ended up showing to you guys too some examples of. I ended up showing to you guys some examples of some practical examples, right? So yeah, um, additionally, you will learn how to analyze central bank policies decisions and their impact on the market liquidity, which is a critical component on the lead strategy. As I told you guys way on the past, on the beginning of this explanation of this presentation, I talk with you guys about central bank policies, and I teach them to how to identify, how to analyze this decision and their impact on the liquidity. By the end of these classes, you will have a clear understanding on how to analyze and identify regions of liquidity and induction in the forex market. Of course, I put here forex market because my mentorship is focused on forex, but I trade Bitcoin, US 30, Nasdaq, US US 100, right? US oil, sorry, US 30, Nasdaq, US oil, and S&P 500, and how to apply lead strategy to take advantage of these opportunities for profit. So buckle up and get ready for one exciting journey into the world of the latest strategy and its practical application on the forex market. Right? So that was the presentation I did that I did, of course, with way more details. As I told you guys, I didn't explain it for you guys this because I think it's unfair to my students. In this one too, I think it's unfair, but it's on the screen. You guys can, if you have full cells in your brain, you can understand. And of course, put on the word in the word, you know, and test, test, do back tests. Try to identify patterns and do back tests. So I won't talk about these two things because I think they are unfair my students to leak this type of content here on YouTube for free because they pay for it, right? So right now, the trade at the beginning of the live stream. If you are new here, please subscribe to this YouTube channel. At the beginning of the live stream, I show it to you guys. I was sharing my MetaTrader with my trades, right? I closed it, one of them during the live stream, the other one I closed it way before. You guys can see the difference on the close time here, right? I don't know if you guys will be able to see it, but the second trade I closed it at 6 p.m. 6, yeah, 6:18, 6, right, 6 p.m. And the first one I actually closed it at 8. This camera have a focus problem. For some reason, sometimes, yeah, 10 p.m., 10:39 a.m. Sorry, not p.m. a.m. So I took two trades on gold, 20 contracts, each one of them. I already closed it two here. I have one other one that I closed it best day. So yesterday actually, right? And yeah, one still running here. And I won't close this trade. Maybe we can talk about it tomorrow if I decide to make a live stream tomorrow. And I think that's it, guys. I don't know if you guys have anything to say to me. My voice, I'm not feeling good 100%. Heart. No reason to this. So yeah, hope you guys enjoyed this live stream. Make it with all the love for you guys. Prepared all this content for you guys with all my love. I appreciate you guys' attention, you guys' time. I have some questions here. Any next possible gold entry? Well, gold. I will think to trade gold on the next scenario. Look, wait. Let me again. Let me make this way more big so you guys can see. Trade gold. I want to see something. I want to see this low getting swept or this high here getting swept. If price still inside this range, I won't do anything. I will just wait to see. If price get out of this range, sweeping this high right here, I will start to look for sell entries, and of course I will close my trade. And if it took me out and swept the low, I will start to look for what? For buy entries, right? US 30. Please analyze US 30. US 30, I don't know nothing about US 30, and maybe I can do a video later explaining a little bit, trying to analyze US 30 and show to you guys some trading ideas there. But at the moment, I don't know. I didn't trade US 30 for almost 2 weeks, I think. So I can't, give you one good opinion on it. I will be just guessing. I need to, following the pair to know, to have in my mind exactly what I can expecting from. Like gold, I know exactly what I need to expect from gold, but I don't have the same um, safe margin, let's say in this way, to talk about US 30 now, because I am not, following it at some point, at some time, sorry. Unfortunately. But I think I will go back to not just US 30, US 30, NASDAQ, S&P 500 in US soil. I will start to trade them way more very, very soon. Very, very soon. Very soon, very soon, very soon. So, yeah, I think that's it. The questions you guys sent it to me here on the chat. Saw them, answered them. Hope you guys enjoyed the live stream. Drop your like and subscribe to this channel as soon as possible. I will do more live streams here, sharing my thoughts, my entries, everything you guys like to see here. Link on the description for my Instagram too. And that's it, guys. Hope you guys are well. See you guys on the better place, uh, Dubai, maybe. Take care, guys. See you. Bye.